Hello, and welcome back to another episode of the Collective Clicks podcast. Today, as a guest, I have Matthew Halliday. Welcome. I'm excited to have you here. Is this your official debut on this podcast, or have you been here before?
Yes, thank you, Brandon. This is my official debut on the podcast, and I'm really excited to be a part of the Collective's podcast and really get into some subjects today. And I'm really stoked. So thank you for having me.
Yeah, I'm excited to have you too. For anybody that doesn't know, if you're one of our clients, maybe you know Matthew because maybe he works with you. He's one of the strategists on our team, and his role in that is that he works with clients to help them make strategic decisions around what they're going to do with their marketing spend. So and that's why you're a part of this conversation, because I can tell you we're getting asked a ton right now. What do we do about election season? And truthfully, like the question is, what do we do about election season? The underlying question, I think, is what do we do about election season and Q4? Because Q4 and election season are both things that impact the real estate investment industry, and they just so happen to overlap with each other at this time of year, once every 4 years, when it gets a little bit like heavier than it does. Of course, there's always smaller elections happening, but there's a lot going on in the advertising world, and people that go through this, they tend to learn some lessons. So let's talk about what those lessons are. Let's talk about how should we be thinking about our ad strategy right now, and how is that different from just any other year?
Yeah, absolutely. Yeah, and I think it's a very cautious time right now in a lot of people's minds. And I think that, the strategy really boils down to a couple components that I think of in my mind first when I think about, different strategies that I would want to implement to make sure that I'm prepared for quarter four. And especially with election season as well. We don't experience this very much. And so we like to have different approaches for different sizes and levels of companies. And so with that, obviously we're going to be talking about different size of company and kind of what that scape looks like. With certain clients, who might be a little bit larger, with taking a bit of a larger marketing approach when you're running multiple channels like TV, radio, billboard, a lot of top of funnel marketing where you're paying for the eyeballs and not necessarily the conversions. I would say in quarter four and with election season, you want to be extremely cautious in those categories, because if anything, during this time, people are going to be paying for attention. Attention is the main thing that, as we know, turns the political tide for some candidates. And because of that, costs can and will rise, as we've seen in the past in certain markets. And so we have to be very cautious about those things moving forward for sure.
Yeah, that does make sense. And I like what you said about certain markets. This is going to be true everywhere, but there's some, like especially if you're in a swing state where there's a lot of marketing dollars coming at that state, you're going to see this different. And it's interesting how it manifests different in different channels. So let's cut different channels and just talk about like different marketing channels you could be dealing with, and are they affected by this or are they not? I think a classic one is TV, and a lot of people who are running TV are going to know that it's affected by this because their TV, like whoever's running their TV is probably going to come to them and say, well, hey, we still want to get you some spots, but also it's going to cost way more money and we don't have as much available. And the whole reason is it's just supply and demand. Turns out the supply TV ad spots is fixed, and the demand goes way up when you have political advertisers that want to buy those ads, right? So you're going to see that happen. You're probably going to say, I don't know how much I want to spend on that, right? So TV is a classic channel like that. Radio is going to work very similarly. There's even other channels though, like tell me what's going to happen on Facebook, and what's already happening on Facebook.
Yeah, so Facebook is a very interesting channel because, as we know, it's social marketing, right? So with social marketing, there's a little bit of an eyeball aspect with it, but also quarter four, I want to address during that time, we can see CPMs rise quite significantly during quarter four because, as you know, there's a lot of different companies trying to push a lot of sales. But you're also, on top of that, now piling on, okay, now we're going to have an election season on top of that. So what we're normally used to on a year-to-year cadence through Facebook is your CPMs typically rise around, a couple weeks out from Black Friday, right? Because of, there's just a lot more marketing dollars going and a lot more attention going towards audiences that you might have similar segments in, right? And it really boils down to, those audiences that you're approaching versus the audiences that others might be using, right? Because again, it comes down to demand. And let's say, if I'm marketing towards an REI segment, there might not be that much demand for that segment in Q4. Whereas in other segments, like let's say, apparel in a Q4 segment, that might have a lot more demand because people are trying to push a lot more product through and trying to cultivate that audience a lot more in their mind. So with that said, I would say that it would be just to see CPMs rise quite significantly on Facebook in particular. I would say it's not going to be as consistent as some people might think. There's probably going to be weeks where it spikes and other weeks where it might not spike as hard. Now, that said, is it still a viable channel, and is it still in a channel that I would be invested in if I was trying to diversify? Yes, I would still have a little bit of budget towards Facebook ads in particular, just because I want to protect my assets and diversify my basket. But it doesn't mean that I'm going all in on that channel in particular.
Yeah, I think this is something you see that's really different from like expert marketers versus beginner marketers. Beginner marketers are like burning the ships. We're going all from this into this. And like you get enough scars from doing that eventually. You realize like, people who are really good at marketing, they basically view it as like, I have things that are working great. I have things that are working good. I have things that are working okay. And I have things that are working poorly. And you're always trying to like cut the poorly, and you're always trying to make the okay good, and you're always trying to make the good great. But you don't cut something that's good for something that's great,
Yeah.
So I would say like my advice to nobody is like, hey, cut all your marketing channels that are going to be affected by this. You want to hold tight, but your budget allocation starts to look different. You want to put more eggs in the baskets that you have a little bit more faith in. This is something important for us to note. Like you basically said this with Facebook, and I wanted to define one of the terms you said. You said CPM. So for anybody that's not familiar, CPM means cost per 1,000 impressions. It's technically Latin. It's like cost per milli. And why we say it that way, I don't know. But that's what we say. That's how we say it, right? And that's how usually you price out like TV commercials. It's often, that's how Facebook prices their model, et cetera, right? Maybe on TV, the station's going to call you up and they're going to say, well, this is going to get more expensive and we don't have as many spots available. On Facebook, everything's just going to be going along just totally fine. You're going to realize you're just paying way more for 1,000 impressions. And that's like fluctuating like on an hour to hour, minute by minute, day to day basis, right? So Facebook uses something called real-time bidding. It's a constant supply and demand ecosystem versus, in TV, radio, and stuff like that. You kind of have them trying to adapt to these things, but you're going to notice it's not going to be quite as granular in how the prices change because it's like people adapting. They're saying we're raising our prices because of this, and some human made that decision versus an algorithmic decision like you would find on Facebook. Yeah, so if you think of like what's happening with TV, like, yeah, this person you have that's a motivated seller, turns out they're also a voter. Turns out they might also buy e-commerce products that get really popular in Q4 with the gift giving season and all that stuff. Turns out they also buy software. Like, these people, we think of them as like our avatar, but really they're an avatar for a lot of people, right? And you're competing with those other people that want them for different reasons. And if somebody else wants them to become president of the United States, maybe they're willing to pay more money to be in front of them right now than you are willing to, based on your business model. So that's something to keep in mind. So what's going to happen? Oh, go ahead.
I would also say the size of market matters too, because TV, when you think about it as a holistic, like TV in itself versus like Google Ads as a multi-billion-dollar engine, right? And then TV, it's like, okay, there's only a certain amount of marketplace that I can take up in that. And that marketplace is going to be a lot smaller than Google, where in election, like let's say, a certain X amount of dollars is dumped in. They would have to dump a significant amount of dollars for it to ever impact such a big advertising channel, and because of that, it also protects, some of the larger advertising avenues because of how large and in scale they are, because people are spending, lots of money on ads every day. And, to have an election season come up, there's only a certain amount of money that can be allocated towards that election season and those advertising dollars that they have in their pocket. And sure, it's a lot of money, but it's a lot more. Advertising is a very big industry, and there's a lot more money on Google than they can ever dump into that system itself.
Yeah, there's a lot of ad inventory for sure. I think the biggest difference, like let's talk on a channel by channel basis, like how you see this affect things is actually really interesting. Like TV, what's going to happen? CPM is going to go up. The stuff's going to get more. Radio, that's going to happen too. Facebook, that's going to happen. What about like direct mail? Well, you're probably going to pay the same amount of money to deliver the mail, but now there's twice as much mail in the person's mailbox.
Yeah.
So it might be less effective, right? So that's kind of different if you think about it, right? It's not like on TV, you like still run your commercials. It's just they're running twice as many commercials. They can't really do that, right? So it's a little different. There is one channel I think stands really steady through all of this, and that's Google PPC. Let's talk about why that is. Like you mentioned, it's really big. But the number one thing that I think makes a difference is that it's intent-based. So if I'm searching for like a way to sell my house, I have that intent and I'm looking for that specific thing right now. Now, if I'm searching for like, who should I vote for in the 2024 election, you bet their dollars are going there if they can, right? They're trying to spend some money there. Or if I'm searching for like a product of some type, I'm searching for clothes or electronics or whatever it is, you bet those companies are going to be paying a lot of money to show there. But it takes a dumb electronics company to run their ad on the keyword "sell my house fast." You're not going to see that happening. I guarantee you're not going to see that from a political ad standpoint. Because why would they put that there when people aren't even looking for that? And now they're going to have to pay $100 a click for it. Meanwhile, with $100, they can have 10,000 people see their ads on TV. Right? They're gonna do that, right? So I think that's the interesting difference. Is like you look at it as like your avatar could be the same as someone else's avatar for a different reason, but if it's a intent-based search, like people looking for what you're providing are going to be there. And it's only pay-per-click marketing, right? So you pay, you choose what you're willing to bid, you choose what you're willing to pay, and you pay for that. So that's where I think PPC is actually like one of the best channels. Now, the things that we don't know about, and I'm curious to hear your opinion on this, what we don't know is how the competitive landscape is going to shift in PPC during this time. Maybe everybody who's spending money on TV and direct mail and stuff like that finds it's not working as well right now. So they're pushing money into PPC and PPC gets more expensive. That could always happen. But that would be like a secondary effect. It's not the primary effect, right? Could people get pushed to it for that reason? Also, what's going to happen to search volumes? I don't know. Like, I know in Q4 in general, search volume is going to go down. There's going to be less people searching for ways to sell their house on Google. And that's going to hurt you. Also, what's happening though is investors are usually spending less money on PPC. So sometimes in Q4, we find some of the cheapest cost per lead that like targets that we have all year. Sometimes like people are trying to push heavy. It's weird. It's like what we know is that the supply is going to go down, but sometimes the demand falls more than the supply. So a lower price, but it could be if the demand holds steady and the supply goes down, you end up at a higher price. But it's something that like I think about, like these people that are selling their houses usually to somebody that they saw on a TV commercial, they still probably need to sell their houses. They're still going to find a way. And in the absence of like somebody flashing in front of them on their TV, going to Google might be a really reasonable way for them to figure that out.
Yeah, and it's also kind of considering the landscape of financial struggle as well during Q4. There also is a little bit more of a struggle in Q4 because, I mean, it's the close of the year, and Christmas time approaches, and some people find themselves in a more slippier slope than others. And so it's also, the need of the market as well. But yes, absolutely. I mean, the demand there and the intent-based marketing that Google offers is none other. And because of that, like you said, if you're typing in keywords like "sell my house fast," Memphis, a political party is not going to be going after that term. It's just not in their best interest because it's not the keyword that they're looking for. The keywords that we're looking for are not the same as, political parties or even to say e-commerce, right? And because of that, we could see that not that much of a rise in terms of cost per clicks. But like you said, if people realize that maybe a secondary effect, they realize that, oh, my TV isn't working, my radio isn't working, my direct mail isn't doing as well as I think it should. Okay, where do we turn? PPC and maybe even PPL, right? And people will turn to those channels more. I think that is definitely something that could happen. I do think it would be a secondary effect, although currently I would say I've seen a little bit of a shift in terms of cost per click across my client's board where it's dropped just a little, which then allows them to pick up a little bit more leads in a sense, right? And it might look a little bit different for a PPC client because, picking up leads is great and all, but how quality are the leads that I'm picking up? And, if the quality is there and I'm picking up more leads, great, more power to it. But, it could be the picture that I'm picking up more leads, but also, my conversion rates and my cost per deal is coming down, but it might take me a little bit more of those leads because I'm getting them at such a lower CPL to actually get, to the deals themselves. So I think it's something that definitely a lot of people need to keep in mind is that Google definitely has a competitive edge while we shift into quarter 4 and election season. It is something that I would say, if you're looking for a place to make sure you can get some consistency from, Google is definitely going to be your best friend during this time. And it's not to say that it's not going to be a tough market, because I do think that in quarter 4 and with election season, it's hard to predict where the market's going to go. And we can guess all day long, but at the end of the day, it's hard to say, is the interest rate going to go up? Is the interest rate going to go down? What's that going to look like for the economy? Those are difficult questions to think about, but it is safe for us to say that intent-based marketing will have consistency.
Yeah. Well, one thing you mentioned that I hadn't even thought about is what happens to pay-per lead in a time like this. It's a little bit wild to think about, because if you think like pay-per-lead companies mostly are doing more like interruption style of marketing online. That tends to be like the stereotype, because they can't generally afford paid search like your traditional PPC marketing. Even though it generates better quality leads, people aren't willing to pay the price required for that, and they can't make their margin on it. So they end up getting pushed into like YouTube, Facebook.
And I would argue that YouTube, I would be careful of as well. In my opinion, I wouldn't say that costs will rise as much on YouTube, but I will say that it definitely could be something that happens just
Similar,
because
in some
it's similar. It's very similar. It's very similar. Yeah. And sure, you can have audience-based segments. Absolutely, you can, and you can be targeting those correct markets. But again, it's eyeballs.
Yeah. But the interesting thing about pay-per-lead is you're not, those costs don't necessarily get passed directly on to the consumer, but pay-per-lead companies run at pretty slim margins. So what happens if like their costs go up? Well, now they're not going to be able to afford to buy as many leads. So they're either going to increase their prices or they're going to decrease their supply, which will in turn end up increasing their prices if they're based on an auction system. And probably, if I'm thinking like what realistically most pay-per-lead companies will do, they'll probably turn even more towards like lower quality lead sources to be able to hit still the same volume of leads that they had prior. And so then what you see is like on pay-per-lead, I'm still paying the same amount of money per lead, but the only way like the pay-per-lead company could sustain that was by lowering the quality. So it'll be interesting to see like what happens with that. Obviously it depends on like how the market affects the pay-per-lead company and how the pay-per-lead company chooses to let that affect their clients. But it's a wild thing to think about. There's one last thing that I want to talk about from an ad strategy standpoint that not a lot of people like they think this way. I think it's beneficial to understand this, especially if you're considering PPC being one of your primary channels in Q4. And it's what I call managing the channel based on 2 parameters. So let's look at like the most traditional way to run PPC. It's that I have a certain budget and I basically tell my agency, my goal is to maximize my number of leads within that budget. That's very traditional. If my return on investment is good, let me raise my budget. If it's bad, let me lower my budget. We also know that within PPC, we're bidding, right? We're spending money. We're communicating to Google how much we're willing to pay for these leads and stuff like that. So oftentimes what we agencies are doing in the background when we're given a fixed budget is we're trying to adjust our bids to pretty much as low as we can get them and still hit our budget. If you bid too low, it's like, yeah, I'm bidding towards a 10x return. This is awesome, but also I don't have any leads because my bids aren't high enough for me to win auctions to get leads, right? And if you bid too high, it's like I'm just like burning through my budget super fast, and I'm like I could be bidding lower, but instead I'm just burning through it really fast and then running out of money, which isn't good either. That's right. That's how we're dialing bids. But in times where like the market, like the supply and demand over election season, we've got election season until November 5th. Political ads are already in full swing, right? And they'll probably just get worse and worse until the time comes. Because obviously, if you're thinking from a political advertiser standpoint, the most impactful time to have that impression would technically be the closest to when they actually vote. So you're sort of just ramping up your budget until it like peaks out right before the vote. And then you probably don't care at all about spending any money on advertising, right? So that's going on until November 5th. And then we're going to have Black Friday hitting us like, later in November. And, platforms like Facebook, you'll see CPMs drop like a rock, like December 26th. And that's usually when like a lot of the craziness is over. So if we're looking at that, so that's a quickly changing landscape, lots of stuff going on. There could be differences in how many people are searching online, and that's going on. There could be major changes happening to like, companies within real estate allocating their budget. So we're just looking at this like massive economics equation where there's so many variables and so many things going on. So what you can consider doing, like here's what could happen. Let's just say competition gets fierce and search volume goes down. What's going to happen? PPC is going to get dang expensive in Q4. It could also happen that it gets really cheap. And I've seen that happen before. And it's also different on a per market basis. So when I talk about managing a campaign from two parameters, I talk about managing your cost per lead and also managing your budget. And what that means is like, we forget about like the other side of that, where maybe you say like, this is what I'm willing to pay for leads. Let me spend as much as I can. And, that's where you're kind of saying like, I know for my business, if I pay $300 for a lead, it's just an example, I know what percentage of those turn into deals. I know what amount of money I tend to make from those deals. And I know what kind of return on investment I need to get. So then I can back into like, this is what I'm willing to pay per lead. And if you do something like that, then it could be that like, let's just say the market works out really favorably. That campaign could just take off and it could spend a lot of money because shooting for that $300 cost per lead, for example, it's able to find lots of opportunities based on the current situation. Or it could be that things based on the current situation are looking more poor. And based on that, we're going to spend a little bit less, but we're still hitting our return on investment goals, but our volume is down. So there's like two things, there's volume and efficiency. And you can fix one of them and the other will become variable. Right? So you could either like say, I wanted like a fixed volume and then like, you don't know what you're going to pay for that. Depending on where the market's at, it could be really expensive for you. It could be really cheap. Or you could say, I want like a fixed efficiency. I got to have this return on investment. And for all you know, that return on investment causes you to like get very little business or, you could explode with that return on investment and get tons and tons of deals. And I guess when I say by managing both of those, like, it's like, this is the time for like companies and their ad agencies to be like in really close contact and figuring out this different stuff because it's going to be changing like on a week to week basis. And you're going to be like trying to measure the data as it's moving really quickly. There's going to be business priorities that are changing, other channels that aren't working and stuff like that. That's where communication is just so important. And you have to understand that dynamic between those things that basically like the more money I spend, the more leads I'll be able to get at a higher cost per lead. And I have to understand what's important to me. Is it most important to me to like maintain my volume, keep my team happy? Or maybe I'm like a solo guy. And for me, like, even if I got no deals in December, that'd be okay with me. I just can't like waste money. And maybe the smart thing for me is I bid a certain price per lead. And if it gets over that, then I'm just not willing to play that game. So you have to think like what's important to you as a business. Which one of those do you want to control a little bit more than the other? Because you can't control them both exactly how you want to. I'm sorry, I know that was a huge mouthful, but I know you managed some of these strategies before with clients and trying to figure out, how do you balance those things? And it gets so much harder in a landscape where like the landscape is changing so fast. Do you have any opinions on that?
Yeah, absolutely. I think with that changing landscape, especially, it's important to recognize the volume versus efficiency. And it's important to recognize your goals and what you're trying to achieve in your search marketing, right? Are my goals to get as many leads as I possibly can under, let's say a $300 CPL. And if that's the case, okay, just set your bids at a certain limit and don't have a fixed budget because a fixed budget's not going to be the best thing for you in that at that time. To say that you should have a 10K budget and, you could, who knows, maybe you rip through that budget before the month is up, and then all of a sudden you're kind of tapped on that in particular. And so I think there's two ways to kind of think about it, right? From a fixed budget standpoint and from a moving budget standpoint. What I mean by moving budget is, being able to accept leads at a certain cost and taking that and running with it, right? Whether that's spending 20 grand, whether that's spending 30 grand, right? Whatever that looks like for that person. And if that makes sense for them marketing wise, if they know from previous experience as well and previous data inside their company that during that time they can convert, let's say 16 gross leads to a deal, or 20 gross leads to a deal or whatever it is, then they can auto reverse that math and figure out, okay, well, where do I need to be in order for me to hit those goals that I'm looking for? And once you can figure that out, you can actually be quite competitive in this landscape. And even in this market where, there's a lot of fear and a fear-based talk throughout the market, and you can even take advantage of those moments where, where most companies will be pulling back. Maybe you're pushing the envelope forward because you understand, those different factors of efficiency versus volume, right? And then there's the efficiency where I say, hey, Brandon, I only want to give you, a 3K budget and give me the cheapest leads possible, right? And it's fixed. And maybe I'm not taking as much risk just because I want cheap leads and I want to be able to, get those cheap leads at an efficient rate. And they're two separate strategies, honestly, for clients. And, when I manage clients, I try to understand what are they looking for in those terms. And once I can understand, if they're looking for that volume, great. Okay, let's push. If they're looking for that efficiency, great. Okay, let's try to get as efficient as we possibly can. And those are things that I'm keeping in mind as, I'm turning for my clients. But it's also, you have to be cautious because you can't get caught, right? Where, oh, Matt, I've run out of budget, right? And that could happen too. You have to set and be very transparent with, the person that's managing those ads and what the budget is, where that's set and what that looks like. Just because, from past experience, there'll be times where they might tell you, $300 CPL. Oh, maybe I'm at 250 instead, right? And then it starts to change because they realize that maybe those cost per clicks are dropping, right? Which in turn they already are a little bit, but it could also be that they drop even further because there are a lot of people either A, shifting out of space, B, tailoring down their PPC because they believe that Q4 is not going to be a time for them to push because they move most of their volume in the summer months, right? And because of that, it also allows for opportunity for other people who might not be larger fish to come into play.
Yeah, no, that's good advice. I mean, I think if anything, like if you're listening to this, a good thing to take away from this is to sort of understand how the marketing works on a level that like whoever you're working with, be it us or anybody else, you kind of know like the language and what you have to figure out. I can tell you from the perspective of, having been a media buyer myself, and I'm sure you'd agree with me, Matt, being a media buyer now, it's like, it's never black and white. Like there's like two, let's talk about the definition of two words. And these, actually, I made this up. I don't even know this is true. So like, don't like take this to Merriam-Webster and get all upset. But when I think it's two words, strategy and optimization. And when I think of optimization, it's all about just like tuning things to be the best they can be. When I think of strategy, that's where it's harder. Like optimization, it's kind of clear. It's usually black and white, right? You're optimizing towards a certain goal. Strategy is often like figuring out what the goal is. Like strategy is not like saying A is better than B. It's saying A is better than B in these ways and B is better than A in these other ways. And we're deciding if A is better than B for us based on our individual goals and circumstances, right? So real strategic decisions, like they have reasons they're good and reasons they're bad. And this is ad strategy, right? Like, so no media buyer without context of like what's really important to your business right now. And not like the surface level context that you share where you're just like, cause you're always just trying to push the most out of your agency possible, or you're just saying like, I just need more leads all the time or something. Like that's not helpful. Like we have to know like how many leads do we need and what are the other dynamics? What's happening with the other channels and what are the costs that we can deal with? And yes, I know you want the lowest cost per lead possible, but let's just say cost per lead is going to go up by 50%. Like, are we still buying those leads or is that a massive problem? And we have to cut budgets. And would it be better for us to have no volume or to pay the higher costs? And like, those are all like, that's strategy, right? It's understanding how that impacts your business. It just takes like a really transparent partnership where like the agency's really keen on understanding what's important to the business and the business is open to just sharing everything with the agency that they possibly can so that the agency can make decisions as if they own the business. That's, I think, the most important thing. If you nail that, then hopefully you're good. And you have to, like, this is a time of year where you definitely have to be in contact more frequently. It's not like November 1st, let's chat. Okay, we'll chat again like December 1st. If we're running a lot of top of funnel channels with like Facebook and stuff like that, like there's probably going to have to be like decisions made on a more micro level, and that's okay. That's how it goes. Thank you everybody for listening to this podcast. I will see y'all next week.